Good evening, dear students. So nice to see you. I have just sent you the emails. Please check it first, then we start the class. Just let me know if you can hear me clearly, so I will continue. Okay, thanks. So you got my mails. So here is. I sent you the files. So just wanna explain you what kind of files, what that include, and so on. Today actually should be our last classes, and then the next session should be based on the exam. So let's see how we reach the practical exercise by today, and then we will see. Need we another one additional class for exercise, or we can just move to exams, okay? Because I want to see your understanding first based on the practical exercises, based on the last topics. So here is today the last session, the last topic to complete our finance will be based on the chapter 8, decision making under condition of risk and uncertainty. We have some theories, and based on this topic we have some exercises too. And the next file I send you, that is exam questions, and the last was based on the exercises with their solutions. So let me explain you the exam questions, actually exam in overall. So how we're going to reach the exam, okay? So let's see. Actually, the exam process will be based like, first I'll email you the exam questions with the practical exercises and with the theory questions. All that exercise and the questions will be based on topics that we have complete, okay? And we'll give you another 15-20 minutes. If you have any additional questions based on the exams, we'll explain you if any misunderstandings and so on. And then you have to complete the exam questions during the 2 hours that will give you. I will give exactly the limit time when you have to email me your answers for exams, and who did submit the exam answers based on the time that I will give you. That will be acceptable to assessment. And what about artists who would will send me the exam answers after the time schedule that I will give you? So here is I have to reject your answers because we have a time limit first. And based on the situation, if you have some technical problems with internet and something else, we'll see it first. If the problem will be like this, I will give you another chance to submit the exam questions. But the second chance will be with the different exam exercises. So about all this process, I'm going to write on the paper first, and we'll send you, let's say, by tomorrow. So don't worry. Right now you can just maybe you can't just remember everything that I told you, but anyway, will send you the paper, the exam paper preparation. Okay. Yes, I know that you have a poor internet facility, and you have maybe you'd have some technical problems. But you must understand that all the online study are running based on the process that I just explained to you. That the lecturer will send the questions, and during the 2-3 hours, the students must reply and give the answers. So, and we will see. If you have some technical problems on that day, you must to advance me first. Okay. Let me explain you the exam questions first. Here is look at the slide. The exam question will be based on the finance topic that we have completed, and on the practical exercise we have done. Let's see. First, we have some topics based on the finance for the non-finance users. Just wanna show you. Here is. And the second chapter will be based on the accounting skills. Okay? Let's see. The chapter first, which is Introduction to Accounting, we have all theory questions. So you would have questions based on this chapter, based on the chapter first. You would have 1 theory questions. So that means you have to review all the topics that I give it to you. Okay? Next one, based on the accounting skills, the first is accounting equation, right? You would have some theory questions. Here is, you can see the question type that I typed you. The theory means you would have the theory questions, okay? Next one, the second chapter for accounting skills is the accounting concepts and conventions. Also will be the theory questions. All this about theory. Let's see the next one. The double entry trial balance will be based on the 2. Next one. The chapter 2, which is measuring and reporting financial position. Here is we have taught about the balance sheet, how to prepare the balance sheet, you remember, and what balance sheet includes. So based on this, you will have theory and the practice question, which is, what means the practice? That means the practical some exercise. If we see the balance sheet, that the practical exercise based on, for example, prepare the correct balance sheet. You have to prepare the correct lines on the balance sheet and with the correct order, right? Here is the next one. We have a preparation of final accounts and balance sheet. The income statement and balance sheet, same things. We have a theory and practice question, the practical questions. You must remember how we prepare the income statement and what kind of the accounts income statement includes. Okay. Let's see the next one. Some of you have a question first. Let me finish the explanation. Then we'll back on the dialogues. Okay. Next one. The chapter 3 is measuring and reporting financial performance. The profit and loss statement. This is the income statement itself. The profit measurement and the recognition of expenses and so on, about the expense, bad debts, all about this would be based on the theory questions. The depreciation methods, you remember we have 2 kinds of depreciation methods. So we'll give you some practical exercise how to calculate the depreciation, and also will be based on the practical exercises. Here is I have just typed for you. So next one, let's see the next one. Next one, here is the chapter 5, which is the ratios and interpretation of accounts. We have talked about the horizontal analysis, trend analysis, the vertical analysis, and about the ratios. You remember? Based on this chapter, we have some theory questions and a few practical exercises. I would like to say you that the practical exercise will be based on the ratios. Okay? You remember them. So you must remember all the formulas we have done on the ratios. Next one, the chapter 6 is about the capital expenditure decisions. We have done is on the payback method. The practical exercise will be on the payback method, how to calculate the payback methods, the accounting ratio of return, the net present value, and the IRR, which is internal rate of return. So actually, we have some exercises based on this chapter. Today we will complete it, and I hope you would have no questions after that. So another one, we have some the performance evaluation chapter based on the return on investments, residual income, and economic value added. We have some also practical exercise based on these questions. So just remember the formulas and how to use the formulas with the figures. The last chapter we have based on the decision making, the condition of risk and uncertainty. We are going to complete it by today, and you would have the practical exercise based on the minimax maximum criteria, how to find the minimax and maximum criteria, and about the capital asset pricing model, which is CPM. Also, we have some practical exercise for today, and should be no problem on the exams. Okay, so as I can see, you say that the situation with the internet is too bad, right? The methodology for exam. Okay, let me explain you first. You remember we have done the HRM, the Human Resource Management. That module was based on the theories, and based on that kind of subject, I can give you the assignments which you can done during the specific time, 1 or 2 months. You remember you have done the assignments based on the HRM, but the finance is a different one. On the finance, we have some practical exercise, and we have to be prepared how to make a calculation, how to find the ratios, for example, or how to find any profit. And if you have some kind of assignments on your jobs, you must be able to make it immediately. I mean, why we do the exams, why I give you the exam questions, and you have to complete during the specific time. So because of practical exercise, and about the theory questions, you don't worry about the theory questions. Will be very easy. You just review the topics that I give to you, and I won't give you something. Something new one or some additional information. You don't worry. All the questions will be based our topics and based our exercises. Okay, what I do? I would give you maybe I would give you not 2 hours, more than 2 hours to complete the questions. If someone would have some technical problems, they have to advance me first and try to prepare to manage all the notebooks, your computers on that exam date. Okay. So The exam, so today we are going to see the practical exercise. If you do right, understand all the practical exercise, then, and if we will complete the last chapter, then the exam will be on the next Friday, okay? If you won't be able to complete what I have prepared for today, then the exam will be after the next Fridays. We'll have another Friday for the exercise, and after that will be let me say it would be on the the exam will be on the 28th of September. If we won't complete for today's everything that I would prepare for you. If we complete, and I would can see that you do understand the exercises, then exam will be on the next Friday, on the 21st of September. So let's see what we can do for today first. Then I think we can make a decision when we can run the exams. Okay. Okay, most of you ask me to make exams on the 28th of September. Let me see, 28. Okay, I can do the exam on 28, but I can't start it at 6 p.m. I would start it at 7, if it's okay for you, at 7. For 1 hour later, at 7 p.m. Is it okay? It's okay, yeah? So I would remind all the rest of students also that we are going to run exam on the 28th of September at 7 p.m. by Kabul time. Yeah? That's good. Okay? So the exam will be on 28. Anyway, we'll notice everybody, so won't be September at 17. So here it is. So that should be okay, right? Most of you are agree. If you are agree, I'm happy too. So let's start the class. Let's start our home assignments. Okay. So just remember that our exam will be on the 28th of September. We'll start at 7 p.m. by Kabul time. After next Friday, you have another 2 weeks to prepare for the exams. If someone have a question, you can just Skype me. The last time I sent you my address for Skype. If you have some question, you can Skype me and ask me. I would explain if you need. So, or you can just email to me also. So let's see. We have exercises that send you. Remember the last time. On the last session, I have sent you the practical exercises based on the techniques for analyzing the capital expenditure proposal, which is the MPB, IRR, ARR, all those techniques that we use. So here is. So I have to say that I received the homeworks from 2 students only. Yep, that's so. First, let's see the exercise number 1, the MPV and the MPV function. So can you hear me clearly? Then we are going to move. Yep. Okay. The first project requires an investment of 500 euros and has expected the cash flows of 300 euro both in year 1 and the year 2. Okay, and the year 2. So that is my printer has been cut. Just a moment, I want to see if we miss some words, some important words. Oh no, that's fine. That's fine. It just the presentation has been copied from the right side, little only. Okay, we have some project. We have investment of 500, and the first year will bring us the profit of 300 euros, and the second would be respectively of 300 euros, right? The question A: calculate the net present value assuming the cost of capital at 10%. The question B: estimate the cost of capital that corresponds to an NPV of 0. That means we have to find the internal rate of return, which is IRR. And the question C: a similar project requires an investment of 600 euros and has expected cash flow of 350 euro in the first year and the 350 euro in the second year, and estimate its IRR. That means we have to find its IRR, the internal rate of return. Let's see the solution for this exercise. The solution, for the question A. First year, we should find the net present value for the project, for the first project. Okay, as you can see, based on the formula, we find the present value for the first year, which is equal to 272.73, right? For the second year, our present values equals to 247.93. That's the present value of the future cash flows, right? So now we have to summarize it, to add on the first and second year and deduct it from our investment. Our investment is the 500, you remember, 500 euros. Then we have a positive net present value of 20.66 euros. So we already found our net present value, which is equal to 20.66 euros. So here we can make the conclusion that our project with a positive net present value, and it can be accepted. The next one, the question B, we have to find our IRR, which is internal rate of return. So I just found the IRR, which is equal to around 13%, right? So I use just the financial calculator to find the IRR. You remember that I sent you the links to find the IRR. Just you have to type your cash flow on the box in the website that you have seen, and click on the find IRR. Then it will give automatically the IRRs of this project. And another one, question C, we have another project with a different cash flow, and we should find our IRR, which is internal rate of return. So I also used my financial calculator. It gives me the answer that the IRRs of this project is 12.06%, around 12%. So here you can see the link to find your IRR, to find your rate of return. You must remember that the rate of return is a rate where is your NPV, the net present value, equals to 0. Okay? That means you have no any loss, you have no any profit. When you have a 0 net present value, that means you can back your investments money only with no any profit and with no any loss. And to make the net present value at the 0, we should find the right IRR, which means the rate of return. So to find it, we use the financial calculator, or we can do it manually. Later, I'm going to show you how we can do it manually. That means without any financial calculator. You can do it yourself with your calculators, with your papers. So, any questions so far based on the exercise number 1? So we have found our NPVs for the first project, our ARRs, and another ARRs for the second project. Any question how we would find the net present value? You remember the formula. Here is the given calculation based on the formulas. What else? Just first you must find the cash flow at the present value. That means you use the formulas, the net present value formula for the first year to find the present value for today, and you use the present value to find the present value of the year number 2. Here is. Then we have to summarize our present values, all of them, which is the year 1 and year 2, and deduct from our investments, from our cost that we invest to our project, which is equal to 500. And after that, you will find your net present value. So some of you ask me how we can use the IRR through the website. Okay, can you see the links that I send you? Okay, let me send you again. If you can open it right now, I can explain you how we can use the website to find our IRR. Okay, just try with me. Here is. So go to this link first. Open it. So I'm going to open also. So open it. First, you would find the topic called the internal rate of return, given to you explanation with the formulas, some cash flow, just as example. And at the end of this website, the web page, you can find the gray box, which is the calculator. Can you see? It's called the example problems. Find the IRR for the following capital budgeting project. Okay? If you can find it at the end of the web page, you find the gray box, which is called the example problems. Yes. Okay. If you do find that, great. So we can see that we have a year 0, 1, 2, 3, 4, 5, right? And the cash flow, here is some boxes. We have to type our numbers. For example, based on our exercises, just a moment, I want to see. So our investment is 500, right? So you must type minus 500 on the year 0. So year 0 minus 500 on the cash flow box. Why is with the minus comes with this minus symbol? The minus means is our costs. The investment, which means our costs, we do with the minus symbol. Then year first, our cash flow, which brings a profit based on the exercises, is 300, right? You must type just 300. Change the figure that is already given to you for 300. For the second year, is same. We can see that is 300, right? So I have, right now I just typed. So you would have the cash flow. Year 0 minus 500. Year 1 is a 300. And year 2 equal to 300. Then our project only for 2 years. That means after that, we have to ignore the cash flow for the year 3, 4, and 5. We put just 0. On the year 3, we put 0, the 0 number. On the year 4, you put same 0 number, and respectively with the year 5. After that, just click on, here is, you can see the link Find IRR. Click on Find IRR, and you'll find that it gives you the IRR of the 13.07%. Can you see? Okay, I can see that some of you already done and correctly. Yeah, I'm happy. Yeah, so this is a calculator. So it's very easy to use. If you have same as this question on the exam, you can do it in 1 minute to find your IRR, right? But anyway, don't worry. Later, I'm going to show you how we can find our IRR manually, which means by trials, which means without the calculator, okay? So try again. Put right numbers on the cash flow box. Year 0 means year 0. That means your investment. If the investment of this project is a 500 minus 500, we don't remember, put minus symbol. The minus means like it's investment. That means our costs that we give 500 to invest in our project. The money cash flows goes out from the company, right? From the accounts. So we put minus 500, and then for the after that, the first, second, and rest of the years will be profits. Just comes with the plus, with the positive number. So the year 0 is an investment with a negative figure, and rest of others is the profits with the positive numbers. But if you have a project, not only you have a project only for 2 or 3 years, you must ignore the others that are the rest of boxes that is given to you. That means the year 3, 4, 5, just put 0 number, that you have no any profits because your project only for 2 years. And click on IRR, and that's all. That give you the right answer. Yes, you must put the your investment cash flow in front of the year 0 minus 500, the negative 500. This is why is it 0? 0 means your investments that you didn't get any profit. 0 that you have been invested from 2 days. That we notice as a 0, that's investment year. Okay. Yes. Okay, it means you still not have any profit. So I hope you do understand how to use, and we can move to another solution. Okay, is it okay with the IRR? So with the NPV should be all right. Yes, you have a simple formula and just use it to find the cash flow at the present value. For the IRR, you can use just the calculator on the website. So try again. If you do not understand, you can try again. Try again. If you have some questions, don't worry. Ask me, because we have to complete the IRR for today. Okay? Because it is a second practical exercise based on the IRRs. Try one more time. Don't worry if you put the if you're mistaken in the cash flow, don't worry. You can do it again. For example, I wanna send you the link that with the right numbers. If you can see that I have typed the cash flow, my cash flow, wanna send you. So you can go to my link and open the website, and you can see that I have typed the cash flow based on this exercise, based on the exercise number 1. Okay, one more time. The year 0. On the year 0, please type the minus 500, which means negative. With a negative, year 1, type the year 1, which means the profit that the project brings in the first year. Here we can see that the first year brings the profit of the 300. This one, 300. 300. You must type 300. Next one, year 2. We have a profit of the cash flow, same, 300, right? You just type on the year 2 box, in front of the year 2 box, you type the 300. And then, this project only 2 years. And then, anyway, you have some boxes for year 3, 4, and 5, right? You just type 0, because you have no any profits, because your project only for 2 years, right? Like that. And after that, click on Find IRR, which is the gray box, if I can explain it like that. Okay, that should be alright, yeah? So, if you do understand, we can move to the next one. So in our IRR, we have found our IRR. Okay, that's good. So, based on the question B, the IRR is 13.07%, right? But the question C, we have a different project, and you must type the different cash flow. Respectively, is based on the C. Here is, on the year 0, type the negative 600. First year 1, type the 360. And the year 2, type the 350. Rest of the years are 0. And just click on Find IRR, and you would find that your IRR for the project 2 is 0.6%, right? So you do same things, but with the different cash flows based on the question C. Okay. So let's move to the next one. Okay, exercise number 2, calculating the IRRs. So we have also the calculation based on the IRRs. So the following table shows the investments in year 0. You see, the investment is a year 0, and expected the cash flow year 1 to 3 for the project A to D. So that means you can see that we have 4 kinds of project: A, B, C, and D. The project A is given for 1 year only. The project B for 2 years. As you can see, the profit that brings the project only, we have a project only for 1 year, right? The project B for 2 years. Project C and D for 3 years. The investments all are same at the 600 cash, as you can see. And please notice that the project D, the last project at the last year 3, is counts with a negative numbers. Can you see it's minus 50? That means that project in the year 3 brings some loss. It won't bring any profit. Without any profit, it brings, besides this profit, brings the loss with a minus 50, okay? So, the project A, the minus 500 is an investment, year 0 investment, okay? Project B, minus 600, it's investment money. And same with the C and D. Where you can see the year 0 is all investments, cash flow. After that, year 1, 2, 3 is the profit of the project. Okay? Then, we have questions. Question A. Calculate, use the financial calculator, the exact internal rates of returns for the project A and B. Question B. Estimate the IRRs of the project C and D using the trial and error approach. This is a different method that I am going to show you without the calculator. Okay? And the question C. Which one is the best project assuming a cost of capital at 10%? So that means you must find them the best project with a rate of 10%. To find the best project, first you have to make calculation to find your NPVs. Okay, for all that 4 kinds of projects. Okay, let's see the answers. First, we have to find based on the question A, we must find the IRR on the project A and B. Okay, here is project A. The IRR is 20%. Some of you given to me answers correctly. Okay, that's good. And project B, IRR is 16.67%. Okay, great. For the project C, we must find the IRRs on the project C and D, but without the calculator. How we can use the how we can make calculation manually? Let's see. Let's see first. Okay. To find it first, we have to find the NPVs at the 10%. Let's make the question C first, then we continue with the question B, okay? So now we are going to find the NPV at the 10% of the all 4 projects, okay? First, project A, the cash flow on the first year is 600. Based on the formula, present value will be 545.45. And we should deduct it from our investment, and we can find that our NPV, that the net present of the project A is 45.45. Can you see? This is NPV. Right now, we are going to find NPV first. Then we are moved to IRR. The project B, we do same things based on the formula. The first year of the cash flow is 400, right? The present value will be at the 10%, 398.90. The second year, the cash flow is 350. The present cash flow will be 289.25. So we are going to summarize it first. You can see to add first and second year and deduct it from our investments, which is 600. And we can find that our NPV, the net present value, is 88.15, right? For the project B. What about C? We do same things. At the C, first year is cash flow is 300, but with the cost of capital 10% will be 272.73 present value. Second year, the cash flow is 300, But with the present values will be 247.93. And the last 30, the cash flow at the present value will be 150.26. Can you see? So we are going to summarize all these present values first for all of 3 years, and then deduct from our investment. And we can find that NPV for the project C is 70.92. Okay? I'm sorry, some of you asked me to be slowly. But this is the same things that we have done with exercise number 1. We just find our NPVs. The formulas are same, remain same, no any news. Just the numbers and figures would change. Okay. Okay. Some of you ask me what is 1 plus 0.10. This is how we can find the cash flow at present value. This is based on the formula. You must type your cash value, divide on 1 plus 0.10. It's a 10%. You remember cost of capital? We have found our net present value at the cost of capital at the 10%. That means this cash money will lose its 10% in the future. Logically, like you do understand like that. Logically, if we have 400 of the profit for today, but in the future, after 1 year, it will be different because money lose its values. How it lose? We can take a rate as 10% of the let's say the money's cost, like that, and the present value of the future profits will be different. It will decrease. Okay, and as you can see, it has been decreased. Okay, sorry, I have some questions. The concept is clear, only way to how to do it. Okay, in the exercises, here is the 0.10 is a 10%, right? It's a cost of capital, the rate of the cost of capital. It will be given in the exercises. Here is, if you can't see, the question C. Which one is the best project at a cost of capital of 10%? You see, the 10%, that means the question is find NPV at 10% for all projects. Okay? It will be given to you already in advance. You won't take some estimate things. But calculations, calculation here is a simple one. For example, this was for the project A, if you can see. The question C, project A. You just take your cash flow for the first year, 600, and divide 1 plus your cost of capital, which is the 10%, and we won't put in the percentage, we just put in the numbers 0.10, right? It's the first year. And you can see, after calculation, it gives you different figures, and the cash flow will be decreased, which is 545.45. Why is here is please notice 1. What is the 1 that put I 1? This is for the first year. For example, if we have the project for 2 years, like in the project B, we put for the cash flow of the second year, we put here is 2. That means 1 plus 0.10. It will be the 1.10, right? And you must multiply the same number 1, 0, 1.10, sorry, 1.10, like that. Wanna type for you 2 times. Yeah, you should multiply it 2 times because it's for the second year, because it's the cash flow of the second year. And then if it's 2, sometimes it's like that. Just X bar. That yes, it's a X bar. It's a years. If you have a project for 3 years, for the last third year, if you can see in the project sheet, you have a cash flow 200, right? And you must put the bar 3. That means that this is the cash flow of the third year, and you must multiply these figures 3 times. Okay. We won't multiply on 3. We multiply 3 times same number. Let me explain you one time more. Let's see, just a moment. Here, just typing for you. In You have a 3. This is a 3. When I do the 3, it's not it's a bar 3. It's a not number you must multiply on the 3. It's like that. Just a moment. I just want to type for you once moment. Then you would be able to understand. Okay, like that. If you have a formula, if you have based on the form 1 plus 0.10 at the 3, at the bars 3 with the trees, this is based on the match. 0.1 you must multiply 3 times because is the profit on the third year, which means our the value of the cash flow will fall 3 times at the 10%. Okay. Some of you give me right answers. Yes. Yes. Okay. So great. Yeah. If you do back on the formulas, you can find that how is exactly should be. Okay, if you got it, we can move. This is not, remember, this is the bars, the times means how many times you must multiply this number. 2 times, 3 times, or if it's project for 5 years, that means you must multiply it 5 times. So let's see the next one. What we have done, I already forgot. So okay, project C MPV is 70.92, right? Here is. Let's see the next project. Project D. So we do same things. The cash flow for the first year is the 400. The present value will be 363.64 with the cost of capital 10%, right? For the second year will be 330.58. And then we must to add on this month. Okay, sorry, some of you says me that for the project B and NPV is different one. So let's see. Just let me check it first. For the project B, some of you says that I have done wrong. Just a moment, I have to check. No, it's right. The project B NPV is 88.15. You check it first. Again, sorry. Okay, here is, I have found the project B. Okay, we do found our cash flow for the first year at the present value, at the cash flow for the second year at the present value, right? Then, based on the steps how to find the NPV, we must add on the first year with the second year. But you remember, the third year comes with a negative number, which means we are going to get some cost. It's a minus 50. You just go back on the table. You can see the project D, the last year 3 brings minus 50, which means it brings some cost, right? So we are not going to found its NPVs. We have to, as you can see, we just deduct it from our profits. You can see I have deducted from our profits. So first I have summarized the first and second profit, then I deducted from the cost, and then also deducted from our investments. And we have found that our NPVs is equal to 44.22 with the positive numbers, right? So project B with the positive NPV 44.22. That means that project brings anyway this profits at the end of the period. So we found all the NPVs based on the all 4 projects A, B, C, D, right? So let's move then to the next question. Do you remember we had a question based on the project C and D, where we have to find our IRR manually, which is trial and error approach. Do you remember? Let's try it. Let's try it, do it. If you do understand the previous one, we can move. So, we must find the IRR for the C and D. Okay, let's see. To find our IRR, our NPVs must be at the 0 equivalent, right? The project C, if you can see, our NPV is 70.92, but it must be 0 to find a right IRR. IRR is the same as given to you cost of capital, which is here is in the project C is a 10%, right? Here is 10%. So that means the cost of capital at the 10% have some NPVs, the positive NPVs. But to find the NPV at 0, what kind of cost of capital should be? That means we are going to move from the back to the front. Do you understand? We should, to make our NPV at the 0, we must find right the rates of returns here is, which is cost of capital. So that means if we have some positive NPV, our IRRs must be more than 10%, okay? So let's see the next one. And then just let's estimate. We can use the rate by 15%. As you can see in the project C, I use the rate at 15% to make my NPV at 0, to make my NPV to equal at the 0. When I use my rate at the 15%, as you can see, after all calculation, anyway, my NPV comes with some positive numbers, 19.29. Can you see that if I have the NPV with the 19 figures, that means I must to increase my rate, not the 15%, maybe by 20%. Why this? The method calls the trial and error. That means we try a few times with a different rate to find our NPVs at the 0. Okay. So let's try to find the NPVs at the 20%. Let's see the next slide. As you can see, same with the project C. I tried the R 20% with and I found that my NPVs comes with a negative number, minus 25.93. Some of you ask why I did use the 20 or 15%. This is just, I have estimated, that if I use the 50%, maybe my NPVs will be 0. But anyway, it wasn't 0, it was 19.29. Maybe I should increase. You must think that if you have some positive NPVs, that means you have to increase your rates, not the 15%. If you would increase for another 5 rates, it will be 20%, let's say. So when I have increased my rate at 20%, I found that my NPVs comes with a negative number, minus 25.93. Can you see? Okay, that means you remember my NPV must be at the 0, must be equal to 0. That means I have to decrease my rate from 20 and found it between the 15% and 20%. And let's say I can estimate that maybe I can use the rate at 17%. Okay? This is the middle number between the 15 and 20, right? What do you think? 70.5 or 70%, let's say. So when I use my rate at 70%, you can see after calculation, I found my present value minus 0.56 is approximately equal to 0 NPV. What do you think? Yes, this is approximately equal to 0. This is the trial approach, the trial and error method to find your IRR. When you going to find it manually, you just estimate what kind of rate, what kind of number you must use to make your NPV at 0. And if you would like to check it, you can use your financial calculator. If you can see, if we use the financial calculator to find IRR, it will be equal to 17.05%, around same as we did. Can you see? It's approximately very nearly to my rate of return, which is 17. Can you see? This is the trial method. Okay, some of you ask me how we do put the rate at 20% or at 17. If you go back on this exercise, you can see that first we have found our MPV at 10%. You remember? With the 10%, we had the positive MPV. If you can't see, I want to show you again. You remember at the 10%, for the project C, we have the MPV 70. Oh, sorry. At 70, which means it's not a zero. It comes with some numbers. If you can see like this, if you do some calculation already, you can estimate that maybe you should adjust your rate to make your NPV at the zero. When you are adjusting your cost of capital, that means your NPVs respectively decreasing. Okay. So then, if you can see, I use the rate at the 15%. Can you see? At the 15%. I increase my rate to make my NPV at the zero. But anyway, after calculation, I have found that my NPV comes with some positive number, which is about 19, right? Then I estimate maybe I have to increase my rate for another more. Let's say for 20. I taken 20%. I have taken, but my NPV comes with some negative number, with a minus 25. That gives me answer that I have to decrease my rate and take my rate between 15 and between 20, between 15 and 20%. And I just estimated logically that maybe I should use the 17. Or you can use 18 if you would like so. And then I found that my NPV approximately comes at the zero. If you can see at the 70%, you see it comes with the minus 0.56. Right? It's approximately equals to zero. And I just want to check myself. I can use my financial calculator, and I have found that IRR is equal to 17.05%. This is exactly the rate where NPV comes with a zero number, the 17.05%. Okay. So I have some questions. Just wanna check them first. Okay. Here is 20%. I use the 20% to increase. I increase my rate to make my NPV at the zero. But I found that here is after calculation, when I found the present value of the first year, which is 250, of the second year, which is 208, of the third year, which is 115.74, and I summarize it, all of them, and deduct from my investment, and found that my NPV comes with a negative number 25.93. But it must be equal to zero. That means you won't decrease anymore, or you won't increase your rates anymore. You must decrease and make it between the 15 and 20. As I can see, I use the 17. Or you can use the 16.5 or 18. Anyway, it gives you some very closely answer to make your the NPV at the zero. It gives you the helps to make your the very closely answer for your NPVs at the zero when you use different rates. Okay. So here is R is the rate of return. It's a 17%, as you can see, 0.70 at the project C. Okay. So any questions so far for the trial and error approach? You see, when we use the financial calculator, it's very easy. You just type on cash flow on your boxes. On the boxes, your cash flows. Just click on and you can find easily, right? But when you do manually, you must try a different rates to find your NPVs at the zero and to find your right IRR. Okay, let's see. We have done with a D. You remember the previous was the project C. We found our IRR, and for the project D we must do same things to find our IRR. You remember previously we found our IRR for the project D at the 10%, and it comes with some positive MP with some figures. Let me show you. Here is. This is project D. You remember? We have done at the 10%, and that gives us the NPV 44.22. But it must to find our IRR, it must be at the zero, equal to zero NPV. That means we have to increase our rate. Let's say it's not 10%, let's say 15%. Can you estimate that we can increase at the 15? Yes, we can do it. Let's see. Sorry. Here is the project D. Is the rate at 15. I just estimate that maybe I can use 15 to make my NPV at the zero. So for the first year, the cash flow comes with 347.83. For the second year, is 302.46. You remember year 3 comes with the cost minus 15. As we generate a cost on year 3, we have to add only to investment costs. Okay? That means you must summarize first your present values for the first year plus second year and minus your investments plus costs. Here is the 600 is the investment cash flow plus 50 is the cost on the third year. And after that, the answer gives you that our NPV equal to 0.29 minus 0.29 is approximately 0. The NPV is equal to 0, right? That means in the project D, we found our IRR rate very easily with one chance. I mean, with one trials only. Okay? Because we use only 15%, and already, if you use the financial calculator to check yourself, you can find that your IRR equal to 15.03%. Okay, around 15%. So this is the trials was very correctly, right? Very closely. The answer for the trials was very closely with our IRRs. So some of you ask me about why I add my investment cost to the cost on the year 3 to the investment. You can't put it as we did in previously, just after 302.46 minus 50. It's same things. It won't be the figures won't be changed. Previously we have done because we calculate the NPVs at the 10%, right? Here is you can do same things. This is won't be change your answer. Anyway, we have to deduct our 50, the year 3 minus 50 from our the the profits, which is comes with the present values on the first and second years. The same things. Yeah, both give same things. Okay. Okay, so this is the, you can see this was example based on the trial and error approach. The trials, which means you have done calculation manually without calculator, but you can use the financial calculator to check your answers. Okay, let's see the next one. We have another exercise number 3, and also our time is 1 hour. So I think we today we finish our practical exercise first. The next class will be based on the chapter, the last chapter, which is decision making under condition phrase and something. Okay, with some exercise. This is very easy topic. Don't worry about that topic. And then will be exam on the 28th of September. So the exercise number 3. So let's start it. The nominal and real rates. What is about it? You know that just right now I'm giving you some kind of difficult questions, right? You can see the exercise a little bit with some, let's say with some the nuance, like with a difficult answer, with a difficult question, with some adjustments and with some corrections. But the exercise on the exams will be more simply, let's say, more simply. The cash flow will be simple, without any cost, as we have seen previously. So you won't be mistaken, you won't be confused, okay? Because I wanna do with you some difficult exercises. Then the exam exercise will be easily for you in the future. Anyway, these things you need to know in your future practice, in your future study. So the exercise number 3. A project requires an initial investment of 500 euros. So we have some investment of 500 euros, right? The expected cash flows of the 300 euro in the year 1. So the first year brings profit of the 300, and the second year brings 316, right? And already reflect an expected inflation rate of 3% per year. That means, so we have a project, and we have to invest 500. First year brings profit 300, and second year brings the profit which is equal to 316. And additionally, we are expecting some inflation at the 3% per year, each year, for the first year and for the second year. You must understand this exercise, okay? So, question A, calculate the IRR and the NPV assuming a cost of capital of the 10%. You remember we have done it a lot of times, that we can do it. Question B, calculate the inflation adjusted, the real cash flows and the real cost of capital. That will explain you later. Question C, calculate the IRR and the NPV based on the inflation adjusted figures. This is different things, you see. You must use the different cash flow already with adjust inflation rate. And the question D, adjust the original IRR for the inflation rate and they compare it to the IRR of the inflation adjusted cash flows. So right now you can see that it seems like very difficult and I'm confused, right? But don't worry. The solution, you can see that it's very easy. Let's see the first question. We have to find the NPV and IRR, right? Let's see. Here is calculation given to you. The NPV at the 10%. So cash flow for the first year 300. At the present value will be 272.73. After calculation, you do understand that you should 300 divided on the 1.01, right? This is simple things. You see? The calculation, just 300 divided 1.01, you will get your 272.73. Okay? For the second year, is the present value of the cash flows will be 261.60. So then we have to adjust our first and second present values for the first and second years. Here is I have adjust and deduct it from our investment, which is 500. Remember? And as you can see, we have got the NPV with the positive figures, the 33.89, right? Okay, we have found our NPV and it's a positive. That means our project can be acceptable at this point. So IRR, by using the financial calculator, you can do it manually, but you must try a different rate as we have done previously, right? But this takes time. Takes time. Firstly, you just can use the financial calculator and to find your IRR that is equal to around 15%. Yes, 14.97 as exactly. Okay, some of you done it. That's very good. So we have done already the question A. The NPV is 33.89. and the IRR is around 15%, right? So that's good. Let's see the next one. Question B. You remember for the question? Okay, some of you ask me if there is any financial calculator for the NPVs. Actually, I haven't tried to find the calculator, but I think it should be if you do search on the internet. But the better if you know how you can do it manually, because if any situation you have no any, let's say the internet, let's say you have no the connection, or you can't get the website with a calculator, it would be difficult. Yes, if you do it manually, like you remember in the school, we know the calculation, all the calculation. You just remind it. 9 multiple 9, how much it would be? 89. Yes, you won't use your calculator. By today, all the children use calculator. They count it. They make a calculation in the mind. That it's not good actually. Some schools do not allow calculator, but most of as you know, most of children they use it at home. To finish their homeworks fast, easily. But the better if you know how to do it manually. Anyway, it's the best solution for you, for yourself. So the question B, you remember we must to find our cash flow with the inflation adjusted. With the inflation adjusted number. You remember our cash flow is in the originally here is year 0. That means the investment is the 500. First year brings profit 300, as you can see on the box, and the second year brings the 316, right? What about the inflation? How we use the inflation rate to find the real cash flow with the inflation adjustments? That means, as you can see, the profit, we are going to make calculation the 3%. Okay, here is the first and second year inflation rate. Sorry, here is mistake, because this one we must deduct it 300 minus 3%, because the inflation we lose the money. Here is okay. This is the sum rounds comes. This is, here is, okay. You just ignore it because I will correct it, it will send you. It's like that. When you do exactly, we have to deduct it. 300 minus 3% from the 300. How much it will be? Who wants to make a calculation? You can do it right now. Send me answer. Sorry, I have been mistaken. I adjusted. That is wrong. We have deducted the 3%. We have deducted because inflation is always our cost, right? That means money, lose it, values. It's a 221, right? Sorry. 291. Yes. 291. This here is the cash flow for the first year. Yes, right. Second year you do same things. We must deduct it 316 by the 3%. You see, sometimes lecture can be mistaken. And that means you must do your own calculation to check me also. So for the second year is 306.52. I have, right? For the second year, as you can see, just 316 deducted the 3% from 316. You'll get it. Yeah, simple. Yeah. So this is how you do the inflation adjusted cash flow. You must deduct your inflation rate, the 3% from your profits, first year and second year respectively. But the investments, the 500, it remains same because we do invest by today. But with the profits, with the future, which is the future cash flow, we have to deduct it our inflation rate, right? Okay, the real cost of capital here is given to you. We must to find the cost of capital with the inflation rate. You remember the cost of capital was 10%. You must just adjust it, the 3% of the inflation. You'll find the real cost of capital will be 13%. This is the correct one. Here we must adjust our inflation rate to our cost of capital because all are these are costs. Okay. The 10% is the cost of capital based on the exercise. You can find it. Plus 3%, 3% is the inflation. Then it gives you that the real cost of capital will be 13%. Okay? Okay? So you do understand how we make cash flow with the inflation adjusted number, with the inflation adjustments, right? Let's see the next one. The question C. We must, you remember, we must find the NPV and the IRRs already with the adjusted the inflation rates. But based that I have done the wrong calculation on the cash flow, you must change these figures. So it will be different one. We can't do that. We have to correct it. Okay, the rate is 13% is all right, but this one is not correct because cash flow is different one. The IRR same things. Okay. If you like, I would correct for you and send you again. And the project D. Oh, sorry, question D. the question was, you must take your original IRR and adjust to inflation rate, and you will find that the IRR with add-on inflation rate will be 18%, right? What about the inflation adjusted IRR, which is based on the inflation adjusted cash flow? Here it comes with the 17.3%, but this is wrong because previously the calculation was wrong. So we should we have to make the right calculation for the NPVs first. Then you will just compare your IRRs with already with the inflation rate and the IRRs which is based on the adjusted inflation cash flow. You see, it's just different things. So I think that's all. Yes, that's all. So don't worry, the correction we can do it, and you will find it. But you must think that you can see that let's say the steps of the calculation was right, but just here's little mistakes with the adjustment. Why I adjust it, I don't know. I think I rushed and I just adjust. Here is, yeah, my mistake. Okay, here is done. Okay, that's fine. Anyway, you have understood it correctly, and I can see that you can do your own calculation based on the IRR and the NPVs, right? The logically I is correct, right? Yeah, you know the method of calculation. So that's all for the exercises. So exam questions, okay. We have some another chapter, but I think we leave this chapter for next class, for next session, because it will be very difficult for you. A lot of information for today, the exercise and chapter. If I mean, you can't get it in your mind, it will be difficult. We do steply, okay? We move step by step. First exercise, then the chapters. Because I know the exercise takes a lot of, let's say, lots of time, a lot of efforts to understand the formulas, to understand the calculation itself, right? So we can just see again the exam questions if you would like so. You remember, you just remember main things about, okay, about just be prepared, how to prepare the income statement and what particulars it includes, the balance sheet, what accounts it includes. You must review your depreciation methods. You remember we have two kinds of depreciation, the straight line methods and adjust methods. This is for the practical. Next one, the ratios. You remember we have ratios. We have different ratios: the liquid ratios, asset management ratios, turnover ratios. You remember we have a lot of kind of ratios. You just and I have given you the list of formulas for the ratios. You just prepare for the exam. What else? For the practice, also the payback method, ARR, net present value, IRR. That's for the practical exercise too. What about the return on investment, ROI, and residual income? Okay, based on that, based on that method, you have the formulas, right? Based on the chapters, based on the topics. But anyway, you will have some exercises, but the exercise will be very simple. You just must take put the correct numbers, the correct figures, or based on the formula. Like use your formula correctly with the figures. So I think that's all. All the rest of other the topics will be based on the theory. But for me, actually, the practical exercise most importantly, if you do it correctly. Because actually, I use the assessment based on the practical exercises. Because if you know how to make calculation, how to find your profits and losses, for example, of course you know finance. That means you know how to use your finance knowledge in the practice, right? So any questions so far? Sorry, just a moment. У меня лекция, давайте я перезвоню. Потом в скайпе ходим, через неделю. Всё, давай, пока. So no questions so far. So we can finish our class for today. So have a good time. So see you on the next class. The next class will be also very important. We have a last chapter because it also includes some practical exercise. So you must be able to join it. Okay? Thanks a lot.